sometimes it really just feels like this market has become nothing more than a plaything in the hands of the Federal Reserve, plaything in the hands of the president.
That was easy.
Yet, if you're too focused on the big picture, even when it's good like it's been this week and the last two others, well, you can miss some incredible opportunities. We pay a lot of attention to these macro forces, but it's worth remembering that individual companies still do matter. Individual earnings reports still matter. Just look at CarMax, the chain of used car dealerships with a stock that exploded higher today, up more than 3%. I mean, it's unbelievable. It had a fabulous quarter. Even though CarMax had already run up dramatically before those numbers, it rallied more than 40% over the past 3 months, the company still managed to blow away the expectations. And you know what? I think this one still has a lot more upside. So why is CarMax still worth owning here? First, let me give you some background on this one. Now, I started recommending this one back in January of 2018 because while the new car market was peaking, I thought the used car market was poised to go into raging bull mode. And thank heaven it was. However, the stock's had some ups and downs. When I got behind it, CarMax was trading at 64 and change, then vaulted up to 80 at its highs last September, okay? And then ran head first into a concrete retaining wall, which was a big rate increase, right here, okay? And then during the fourth quarter sell-off, well, CarMax then it was hurt a lot worse than a lot of other companies. After a series of very strong quarters, the company reported numbers that were good, okay, but not great in late September. Then in December, they delivered some genuinely disappointing numbers. Same-store sales down 1.2%. Stock pulled back to the mid-50s, which I understand. I mean, this thing had been red hot. You can't have any disappointment like that. It didn't help, by the way, the Federal Reserve, of course, was raising interest rates, and many people need financing to buy a used car. The short-term rates really do matter. In the wake of that quarter, CarMax couldn't really rally, along with the rest of the market at the beginning of the year. Not even after the company hosted what I thought was a very bullish analyst meeting in January. I loved it. The business seemed to be struggling. Management was spending a fortune building out its omni-channel capabilities with the goal of allowing customers to complete the whole process of buying a car online. Building up a digital business out of nothing can be really costly, and it doesn't always pay off. People couldn't make up their minds if this was a positive catalyst or just one more thing to worry about with a stock that was breaking down horribly. I heard the head and shoulders pattern. You know, all the different negatives were emerging here. But in the last 3 months, CarMax has come back with a vengeance. First, the company reported better than feared quarter in late March. Even though the sales were a little bit light, the earnings were substantially better than expected. While the numbers didn't look that fabulous, they took Wall Street's biggest fears off the table, which is why the stock rallied nearly 10% on the news. Just boom, okay? Plus, the omnichannel experiment, well, it turns out it's working. CarMax rolled out their new internet business in Atlanta, and these stores saw their same-store sales grow by double-digit. Remember, that was a test market, but once you see it works in Atlanta, why shouldn't it work everywhere else? And that was just the start, because this story just keeps getting better and better. Like I told you, this stock spent the last 3 months surging higher. The bar had been raised. When CarMax reported this morning, the numbers weren't going to be graded on a curve like they were last time. We needed a genuine blowout. And that's what they gave. Management didn't disappoint. CarMax delivered some fantastic numbers, a 10-cent earnings beat off a $1.49 basis with higher than expected revenues and same-store sales rising 9.5% year over year, much higher than the 5.6% figure that Wall Street was looking for. And remember, man, the car business is not that good, but this is amazing. Where did these incredible numbers come from? As CEO Bill Nash, one smart fella, told us in the conference call, quote, this strength in retail is the result of a combination of many factors, including our solid execution, which was supported by enhancements to the customer experience, a robust lending environment, and a delay of February tax refunds into our first quarter, end quote. Between lower interest rates, these tax refunds, and stellar execution, I think you have to say that CarMax is firing on all cylinders. And it's not just the retail side. The company's wholesale used car business was also very strong, up 6% year over year. At the same time, I think they have a huge opportunity with this digital business. We know Carvana, the totally web-based used car retailer, that's been growing by leaps and bounds. We've featured that for you, although I became skeptical of the sky-high valuation. But there's a huge opportunity to sell people used cars on the internet, and CarMax is taking advantage of it. The company's been building out its infrastructure so that they can cater to these online-only customers who don't want to deal with the hassle of speaking to another human being. Remember, the millennials hate to talk to people, and they certainly don't like to talk to a used car salesman. Now, you buy it online, they'll deliver your car to your house. How do you like that? That's what they do. Now they've got their omnichannel pilot program in Atlanta, which once again saw double-digit same-store sales growth. Remember, you have to project that across the country. Nash explained that, and I quote, "The Atlanta market continues to outperform the overall company in both comp sales and appraisal buys," end quote. Oh, and one of these omnichannel centers can serve a lot more than just a single city. Earlier this month, CarMax rolled out its omnichannel at the majority of its stores in Florida. They're going to do the same in North Carolina, Virginia. That's all from this one center in Atlanta. Next month, they're rolling out a second omnichannel customer experience center in Kansas City. And they're deciding on a third location for later in the year. In fact, by the end of the current fiscal year, CarMax says it's on track to get their omnichannel offering to a majority of their customers. Nash also thinks the digital business could turn out to be more efficient than the traditional business model. That's been true with everyone else. Why shouldn't it be true with used cars? Granted, it's going to be expensive, but it's based on the results we've seen so far. I think it's worth every penny. In the end, I'm betting CarMax can do anything the Carvana can do. They don't even need to build out those big used car vending machines because they've already got more than 200 showrooms nationwide. Finally, the macro is really in CarMax's side again. It's really in their favor. Remember how the stock got clobbered in the fourth quarter, okay, when interest rates were rising? Now long-term rates have come down hard, and the Fed's likely to cut short rates, both of which allow people to get cheaper financing again. And do not forget the tariffs, people. The tariffs work in favor of this. I think CarMax is a big winner from any escalation in the trade war. Why? Because anything that makes new cars more expensive, like tariffs on, say, steel, right, on aluminum, well, it ends up giving used cars a competitive advantage. If President Trump ever follows through on his threats to slap tariffs on German autos, what a win for CarMax. And it could happen. Not yet, but it could happen. Plus, in a slowing economy, you have to believe that consumers become more price sensitive, which gives used cars yet another edge on used cars. Think of CarMax as the TJX of the auto industry. It's perfect for a barbell economy, where the rich are still buying the same stuff, but everybody else is trying to trade down in order to save money. Seen the dollar stores lately? Best of all, even after this epic run, the stock sells for less than 16 times earnings. That's crazy. That's next year's numbers. I think it's a bargain, although obviously I'd like it to pull back. I mean, what am I going to tell you? I want you to buy it here. I mean, you know, it's maybe buy some here and then buy some here in an overbought market. That's what I want you to do. The bottom line, you know I don't like to chase. That's why I'm reluctant to just say go buy some. But CarMax just keeps roaring, and after today's terrific quarter, you know what? I bet it's got more room to run. How about we go to Alex in California, please? Alex.
Big booyah, Big Jim.
Well, Alex is coming to play today. What's going on?
Hey, Jim, I had a quick question about General Motors. With NAFTA going on and the potential ability to close that, and with GM's Cruise line and the cars that they have coming up in the next couple of years, do you think GM is a buy at these levels?
I think GM is in one of the most challenged positions of any company I follow. I think that GM is entirely possible that if we do not get the United States, Mexico, Canada agreement, this is going to be a stock that's going to go to 30, and it's a very expensive stock, but it will just get more inexpensive. I say stay away. CarMax is king of the road. I bet it's got even more room to run. Hey, much more made money at it. After a tough day in the cannabis space, I'm eyeing an unconventional play that could be worth considering. Then, are you suffering from IPO fatigue like I am? Well, you're not alone. Let me tell you something. I'm going to tell you what it means for the market and all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.